the notes that we originate. So opposed to buying other notes, people originate their homes that we bought and seller financed in Arizona. Those positions pay 10 to 14% interest. So whether one investor wants to buy one note and make the full yield for the 20-year term, or I can pledge that note in order to garnish capital investment for a 1-year term, say at 10%, kind of nimble in that accord. And then we scaled from the single notes to starting a fund. So now we raise accredited dollars, paying 10% for a monthly distribution and a 1-year term, 12% for a quarterly distribution on a 3-year term. And they're all on notes that we underwrote, controlled the asset from the very beginning, and vertically integrated to raising the capital for those positions.
And if those notes stop performing, who handles that?
So depending on how the structure was up front, in the fund, it's guaranteed by the fund. So the fund at no cost to the investment partners will reperform the asset, likely reseller financing that home. If it's one note, one investor, and they own that in their portfolio, the brunt of that risk is on them. But at cost, we allow them, our back office attorneys, to repossess the asset, evict the individual within 40 days of non-payment.
All this only in Arizona?
Currently only in Arizona. We've looked at a few other markets, but we're pretty blessed in the market itself. Yeah. It's our backyard. And then 10% of housing is actually manufactured housing in the Arizona market. Gotcha. So a wide variety of opportunity for us to scale, not only just in our backyard, but the desired zip codes. Are you a lender, or what is your business?
I am. I just lend my own funds, invest some of it, and kind of play in between depending on how much work I feel like doing.
Sure.
So, yeah, if you get north of 13%, then I'm interested.
You know, that would be a single note investment. You know, you buy the whole note and buy that out of my portfolio. We have about $500,000 in transactions, about 7 homes currently in escrow, varying from $50,000 to $100,000.
So whatever the duration left on that note,
correct.
You've got it.
Correct.
And
technically,
if it stops performing, it's on me.
Correct. But at that point, anyone that buys a note from us that we originated, they get our back office staff at cost. So the eviction is like $750. The 2 months back fees likely. So that's about $3,000. Then do a landlord move in and out special with our contracting staff numbered 15 and put it back for sale and remarket it. There is a 2% default rate on our transactions. They're properly underwritten in order to facilitate the financing, mitigating non-performance. But if you do enough notes, you know, some are bound to go non-performing. It's just a law of numbers at the end of the day. But for that being a low default rate, kind of mitigates that.
Yeah. So the fund's at 10%.
Yes, 10 to 12.
10 to 12.
Yeah, and it's bank quality stability. So you're across multiple notes in that situation. You're getting just your structured return, opposed to the potential sweat equity of owning an entire note. There's some servicing things that come up. You know, people pay late sometimes. You know, it just kind of depends on what kind of return and how hands-off you're trying to be at the end of the day.
I'm trying to think of a question right now.
They're all great questions. We have about 25 notes currently working in our portfolio. We've done 350 transactions. That's about $30 million in seller finance and note sales. It's a pretty good track record.
Well, I guess you would, if you looked at single notes, you'd be able to tell me how many you own in that park.
Yes.
Or
I could tell you that.
I imagine you have clumps.
Absolutely. Yeah. So Mesa, Tempe, Phoenix, Glendale, Apache Junction, and a little bit of Peoria. But out of 350 deals, we've been in damn near every one of the parks in the valley and could show track record performance on those specific properties, you know, within your due diligence. We're main corporate sponsors also of Arizona Real Estate Investors Association and then in Business Network International. So our branding is pretty vast to provide clarity.
Do you have any sway or influence on the managers of the parks once you have loans on a certain amount? I mean,
there's sometimes some hardship with that equation, but we've been elevated over the past 8 years to the owners of these institutions. So opposed to just dealing with a bulldog park manager, you know, we're known through the corporate entity, like the number 3 at Cal-Am Properties, Equity Lifestyle Solutions, Kingsley Management. Those are just some of the institutions that own the parks, and they call us when things go awry. Like when they repossess a home that say we don't have a loan on, they call us. They say, hey, would you like to buy this house, put it out on the market, provide your financing? It's a mutually beneficial relationship, where in most cases, if you say you're flipping homes in their park, they're going to throw the hatchet at you.
Yeah.
You know, it's a negative connotation. But with us providing long-term investment strategy, they see a win-win situation.
Yeah, well, they see push button fix.
Exactly.
Yeah.
You know, they're in the business of owning the dirt.
Yeah.
Do they want to go and flip a bunch of old homes, make them look new, and provide the financing? You know, that's a heavy lift. And to do that properly, you know, is important. So we're almost like a knight in shining armor for a lot of these institutions. They've invited us to other markets, but there's enough business for us to do in Arizona. You know, with the density of manufactured housing, we could 10x our business just in these zip codes.
Yeah. All right.
Maybe I could grab your information. I won't blow you up by any means.
Yeah. I'll send you some.
We do a weekly mastermind. It's on Thursdays at 1 o'clock Mountain Standard Time for free.
What do you want me to?
Here, there you go. Full name, phone number, and email would be adequate. Given the conversation, are you more of a fund investor or you want to buy a note? Kind of, you know, what is that?
I've done it. I've done all three. I have like I was just talking to foreclosure guys about a note that's not performing. I got a go legal on it. And then I do originate for some bridge stuff, small end, things that I can handle for fix and flip. And then I also have money completely passive, just keyboard warrior stuff.
Yeah.
Well,
I'm trying to
ROI.
think of what marketing material to send you more than anything.
Yeah. Well,
that way I don't waste your time.
Yeah, I don't think I'd be interested in your fund at 10%, but I'm not sure because of the complexities of chattel loans, and I don't understand it all. So I don't know if I would pick up a note. That's why I was just trying to determine what the rate was on it.
Yeah.
So not that I know exactly.
All good.
Because I just don't know exactly what was on that space.
For the repossession or for in what accord?
Well, I was thinking, if I could just buy a note. You were saying that the yield on that's about 12 to 14.
It's 14 or 15%, depending on how it was originated.
Yeah. What's the average size of those?
50 to 100.
Yeah.
So I have some 15% notes that are being originated early next week. One's at like 95,000, and it's a family that got qualified. They're pending transaction and they're approved. That's about 95,000, and that monthly payment's like 1,300 a month or something like that.
What about compliance issues with originating
So we have a licensed mortgage officer on staff and use third-party underwriting in order to process those transactions. So opposed to not being compliant, they're more compliant than not. And then our dealership is licensed, bonded, and insured as a D8 dealer of manufactured housing.
Well, just
anyway,
just blow me up with the fun stuff and with this and with the the single note type stuff.
Okay.
I'll look at it.
Sure.
Yeah.
Absolutely.
Interesting.
I arranged a few terms as low as 1 year at 12% paid monthly. It just kind of depends on what kind of capital is available at any given time. We're looking to do deals at the end of the day.
Yeah, 100%. What's the turnaround time if I need to get funds out? And what's your minimum?
Minimum's 50,000. That's average note, 50 to 100.
Yeah.
So, ideally within 30 to 60 days, providing liquidity. I built up my platform on mobile mailbox money to sell our notes. So we already have a back office, another business that sells to other hedge funds and private investors to liquidate that position.
Yeah.
Or I raise more capital in the fund and provide liquidity that way. Or I borrow against that note personally, kind of nimble in that accord for liquidity. Opposed to it being a $5 million multifamily complex, that could take a year of due diligence to get an exit.
Yeah.
It's $50,000 at the end of the day.
Yeah, I gotcha.
Anyway.
And then the rehabbing of the properties, is that all in-house?
Yes. So we started as Wynn Mobile Homes. We're the largest D8 dealer of manufactured housing in Arizona, buying, selling, and listing niche market manufactured housing, and then vertically integrated from there. So we have 15 in rehab, 7 in sales, 5 in management. I got like 10 VAs right now working, and 1 in accounting. So a good back office staff. It's not just me and my father swinging the hammer,
Sure. No, it sounds like you got yourself a good niche.
Anyway,
I like it.
That's the opportunity. Richard, nice to meet you.
I didn't catch your name.
Alden.
Alden.
Yes, sir.
Thank you.
Yeah, where are you from, by the way? Torrance,
By-
California.
Yeah, by LAX.
Oh, okay.
Yeah.
Any events over there that are worthy of conversation?
Well,
We like to go to different real estate
has
events.
your dad presented at RIA's before?
Possibly. It's been a while.
He may have presented at one of my RIA's years ago.
So you own a RIA or
No, I don't.
or one of the local ones? Oh, okay.
He may have presented because this is ringing a bell.
Yeah.
Arizona. This is ringing a bell.
James Guajardo.
I mean, I can't place the name. I couldn't even place his face. I just remember the presentation barely.
All good.
And then I was talking to somebody else at lunch, and they mentioned you guys. And I go, oh yeah, I saw a presentation in Arizona. They were like, yeah, that's what they're doing.
Yeah.
I said, oh, I should go over there and talk to them. So I may have heard the presentation pre-COVID.
Sure.
Does that sound about right?
In the same strategy?
Not as polished as you are now.
It's